Hello, fellow investors. Welcome to another episode of Ritter On Real Estate, where we teach you how to passively invest like a pro. Today, I've got a returning very special guest, Julie Holly. Julie is the founder of Three Keys Investments. She does a lot. She does a lot of coaching. She helps others level up. She's a speaker. She's an investor. She's moving into different asset classes, which we're going to talk about some alternative asset classes today. And so, Julie, thank you so much for coming on, being a good friend, and for coming back on the show.
And I was like, how can I say no? I'm like, how could I book this even faster? I'm so excited to be back.
Yeah, awesome. I mean, we had so much fun on our last episode, and then I think we did some great content together and just kind of talking about current events and what's going on. We'll have to do some more of that, get some more of that out because I think I mean, frankly, that was some of the best content I think I've had on Instagram, what best received. So
But
more
I
to
think it's
come.
because it was we were both just being completely authentic, and yet we were trying to be positive. It's so that kind of creates this really interesting dynamic. It was like, okay, we want to talk about the underbelly of investing and some of the things that we see aren't working well in the marketplace, but we
Yeah.
also want to show honor and respect to people. So I felt like it was like beautiful
That's right.
content.
That's right.
It was funny and pointed, all while being gracious, which is a really how do you do that?
Yeah. Just
We
en
do. We do
just
it.
enough to be a little bit cathartic and letting it get a little bit off our chest. So very good.
It did feel good. It felt really good.
So today I want to hear about assisted living. So you've been kind of a new foray, I would say, right? It's kind of identified a great asset class to focus on. And so what we're going to do today is Julie's going to break it down for us on kind of, what is assisted living, why assisted living, and then we can talk about some of the nuances on how it differs from just a normal real estate investment because there are, I think, some key differences. And I think that will be a really good intro for the group and listeners into assisted living, and folks can, go out and learn more and see if it's the right fit for them and their investing.
I think that's great because, and I'm going to say it's not the right fit for everyone. And we're starting to see that, starting to see people that want to get into it and realize there's so many moving parts. You really have to have eyes all around your head and have a team that has eyes all around their
Sure.
heads because like there are so many moving parts. But why don't we just like take it from the top, like you said, and say like, I think
Yeah.
it was like why assisted living or how
Yeah,
and
like
what
sell
is
me
it?
on assisted living. Like what's the value prop on why
Right.
assisted living is a good investment right now?
Well, the way I mean, I will go back to my own personal genesis, being
Mhm.
a little tender kindergarten student, and we were going and doing like Christmas caroling at this neighboring nursing home. So, like, I'm older than the average bear, and so I'm like at this is years ago when it was more they were called like nursing homes. We don't generally see places called nursing homes anymore because we've identified and isolated these different facilities in different ways. But I remember going to this facility. I remember it being kind of dark in there, kind of dingy, had a smell to it. But I also remember as this young kindergarten student really loving the older people, kind of being a little unsure, but seeing that my heart like connected to their hearts. I'm like, oh my gosh, they look so lonely. Like they look like they need us here. They like it was just such an interesting thing. And it goes with my nature. I love people and I always have. And so back in kindergarten, having that experience, walking my like participating in my grandparents going into different care facilities, independent care, going into assisted living, and being, an adult at the during those times and seeing and experiencing that transition in their life. So when I came into the syndication space and just the commercial real estate space, I was like, I would love to, I mean, assisted living, it's really similar to buying an apartment complex, right? And I remember asking my mentor, like, I'd really like to look into this assisted living space. And my mentor just saying, like, hold on. How
Mhm.
about you stick to multifamily right now? Because when you buy assisted living, you're buying real estate and you're buying a business. And it's not just an ordinary business that's going to be simple to run, but there are a lot of moving parts and a lot of licenses you have to have, a lot of protocol you have to meet. I mean, there's just so many different layers on the business side. So I cooled my jets and I'm like, okay, I'm going to just like zero in, learn multifamily really
Yeah.
well. So now we go into this opportunity that I had presented to me with some investors that I've known for years, and they have already like walked the path into assisted living. Now, that presents a really unique opportunity, right? I don't like to go into new things by myself. I like
Sure.
to go where other people have already learned because I don't want to put investors at risk just because I want to learn something new. Like let me have some mentors in this and some people that can guide in an effective way who have solid experience. So that's how I got into it now. So the selling part for me is different than a lot of people. I'm just like, "Oh my gosh, there is this solution that people need and I can be part of it." But the greater solution is when we're looking at what's taking place when we have 10,000 baby boomers retiring every single day,
Yeah.
every single day. And when we look at the demographics, if we think that the multifamily housing is in a we don't have enough units, right? We are underserved in most markets. I always say Austin, Texas, we all know if everybody, like took action on the permits that they have pulled,
Right.
like Austin would have enough housing. But
Right.
I'm like, I don't know how many markets are actually like that.
Yeah.
But we can look at assisted living and it has that exact same dynamic where not only do we have not enough units available for the need, because 70% of people will need to go into assisted living care at some point past the age of 70. So like you have this huge need for it.
70%, really? I didn't realize it was that high.
70%. Yeah, it was like 7 out of 10. So,
Mhm.
70%. Right. Like that's a huge need for people. So you have this undersupply, then you have the pandemic take place. So now you have a lot of owner operators that endured the pandemic, and it was a burden, it was cumbersome, and there was a lot of burnout. And so you have a lot of people wanting to exit that space, sometimes even shutting their facilities down altogether,
Mhm.
which is only further impacting, at the time when we need to be growing and having more opportunities and more facilities, it's actually, constricting.
Gotcha. Yeah.
So,
I mean, though I think that's a great place to start, right? With any investment in real estate is supply and demand. So there's good supply and demand dynamics, there's a lack of supply. Demand is growing, as you said, 10,000 people turning, what was it, 65 every day?
yeah.
Yeah, that's
Yep.
pretty powerful. I think the other metric too that I've heard is like it's like 4,000 or so people turn 85 every day. It's something like 80 or 85. So it's like even when you get to that age, still a significant amount of people
It's
um
huge.
getting to that age where they really need that extra assistance. So
Yeah.
let's talk through I would love to hear, so you talked about nursing home. I think like you said, everything used to be called a nursing home. Now there's these different segments or definitions, right? So like
Yeah.
what is assisted living? Where does that fit in the spectrum?
I love this is really important. So when I presented our investment opportunity, to our investors, this was a conversation. What are we
Mhm.
actually buying? Because everybody has something that's triggered in their mind when they hear assisted living. Like, okay, the first time you ever heard assisted living, what came to your mind? What was the level of care that like you've known about now for years, but like
Yeah.
the first time, if you can go backwards.
Yeah, I mean, well, my first experience with anything like that was, I mean, kind of similar to you, where it was my grandma being in what would have been a nursing home back then, but that was all I really knew, and I didn't really know like the definition between the two. Then I went into healthcare consulting, and I learned it at a very detailed level because there's a lot, but But yeah, I think just, that idea at first, I just didn't really know a difference, honestly. If you told me nursing home, assisted living, whatever, it all would be the same to me.
Yeah. So something comes in, and listener, you're something came to your mind when we said assisted living.
Mhm.
So what is it not? It's not independent living. It's not, a community where, just people over the age of 65 go and they live and they have, they're completely independent. They don't have any care given to them at all. And there are facilities where they will have a mixture of all these different types of living under the same roof, even. But so we have independent living on one hand, where just normal, everyday people who don't need additional care. On the other end of the spectrum, let's go to memory care, where we need 24-hour care for
Mhm.
this person due to memory, or maybe we need 24-hour care because of health concerns that are, they need to be connected up, more that traditional nursing home style. In the middle, I affectionately, and I say this affectionately, and I haven't heard back if this is disrespectful, so I'll, like, we're good friends, so I'll trust your feedback on this, but I look at assisted living facilities as like helping toddlers. So, you and I, like, we have families, we have kids. And I remember when my kids were, 2, 3 years of age, and they could communicate with me and they can talk with me, but they couldn't reach the glasses for a cup of water, or they couldn't, like, they needed help, in the
Mhm.
bathtub getting dried off, or they just needed that little extra care that they couldn't do on their own. And so that's been my own affectionate way of describing assisted living is, hey,
Mhm.
I just need a little extra assistance along the way. I can't do all of these things on my own, but I'm still functional. I'm still here, I'm
Yeah.
capable of things. I don't need you doing everything, but I do need your help.
Yeah.
Can you drive me to the store?
Yeah, and am I correct that, like, one of the lines of definition is that you're not providing medical care? Is that right?
Exactly.
Okay, that's
Yes.
what I
Yeah.
thought I
And
understood, and so I think that helps from a liability standpoint too, as you think about where it sits, and I think you're right, there kinda is that pocket between that independent living, it's like that 55 older community, to all the way when you're in a nursing home, which is that you're providing medical care. And it's I like what you said. You're just, it's assisted living. You're providing a little extra assistance there day to day. And that could be varying
yeah.
levels too. You kind of figure out your own mix there.
Yeah. Yeah. And that's a really great, like, you just put the bow on top. Like, no medical care, which, again, to your point, lowers the risk, lowers the liability right there. And it's a whole, like, every single one of those independent assisted memory care nursing homes, every one of them have different nuances. And
Mhm.
so it's like, if you're going to choose one, choose it and do it well. Just like if you're going to go into multifamily real estate, like, figure out what asset class you want to operate in and then do it, and do it with excellence.
Yeah,
Don't try to be everything across every spectrum.
that's right. You got to pick a focus. You have to
Yeah.
pick a focus. Be able to become an expert in it.
Yeah.
So with assisted living, so okay, so we understand why huge demand, not much supply. We understand kind of where it sits, but assisted living, even in the way, the type of building where it's like it can be a lot of different things. So tell us about your strategy for, I mean, what kind of real estate are we buying here?
So our strategy is buying larger facilities. And that is meaning larger, meaning, well, what we're purchasing right now is 125 licensed beds.
Mhm.
So we look at that, or I should say what we have purchased. And my partners have purchased more than that and have operated it. However, we're looking at something larger. Now, this is where it is a good caveat. And I definitely have some opinions. I like to look at the experiences that I've had, right? Our personal experiences can actually shape and inform wise investing strategies. And so when I look at one of my grandfathers, he actually had rental properties that paid for his, later years of life, the care that he needed, which was really fantastic. My mom and her sister found a home that had been converted into an assisted living facility. So it had roughly 10 beds in it.
Yeah.
And I remember taking my kids to go visit. And my grandpa was lucid. He was, still, just a fantastic, wonderful person to be around. But not everyone that lived there was lucid. There were a lot of different levels of awareness for,
Mhm.
and ability. And so my grandpa was on the higher end of the spectrum, and here he was in this community where he didn't have community or companionship or anything available to him.
Sure.
So I definitely have and I like to go big on most things in life anyway, right? Like you can do things in a really cool way at scale. You can offer a lot more. So when we
Absolutely.
were purchasing larger facilities, now what I noticed walking through the 5 different buildings on this particular complex. Now, listener, remember, we already said I'm like just getting into this. So it'd be fun, like a year from now, how many other facilities have we purchased? Because I'm a little obsessed with this because I see the solution. But
Yeah.
um, I loved walking through these different buildings and seeing that there was actual community taking place. And as I've processed that, I realized the value of having these buildings that have, 25, at least 25 people residing in them at any given point, because you have different abilities. You do have different cognitive abilities, you have different physical abilities. And what I saw was every building had people engaging and interacting, which is part of the human drive. Like one of our human drives is for connection and companionship. And so when you see people singing together, which in harmony blew my mind,
Mhm.
um, watching TVs or, watching old Westerns, crafting and things like that. I'm looking at this on the human side of it and saying, like, how is caring and showing respect and dignity and care for people at this, golden stage of life? Like, how do we send them out in a beautiful way? How do we make those years still a wonderful experience in their life? And so now I see, gosh, if my grandpa had been in this particular facility, right? Like he would have had other people to talk with and engage with. What would that have provided for quality of life for him, right?
Yeah.
So when I'm looking at these facilities, the concept is it large enough to meet the human need, that the natural human need? Is it I want to look at, how is this run? Is this being run well? Is the food quality high? Is the staffing, are they truly like present and caring and nurturing? Do they have relationships with those residents and such? And then I want to look at, is this currently at a quality of life that we want to sustain because it's already well run? And if it's not, are we going to be able to improve this and create that solution so that people are having a higher quality of life and higher standard of living? And if we can't do that, I don't want anything to do with it.
Yeah.
I specifically walked every part. I mean, we're doing due diligence anyway, but it's like, would I put a family member here? In this particular case, it was like slam dunk. Heck yeah, I could put a family member in any one of these buildings and be comfortable. But the question in my mind has always been like, if I couldn't, would we be able to do something about that so that we could get to that point? Because
Yeah. Yeah.
if we can't
You
put
know
our
what's
family
interesting to
members there,
me? What's really interesting to
yeah,
me, just from, again, kind of coming from a healthcare background and not doing much work directly related to these type of facilities, but just being around people that were, and just, I mean, hearing focus, and just, I guess, the general focus in healthcare in the time that I was in consulting was a lot around cost reduction. How do you reduce cost? How do you trim margin? And it's kind of refreshing to hear, to think about, instead of, a facility being owned by a uh, massive healthcare system or some giant national operator, um, about, where private investment could come in and really make a difference. understanding the returns, and not needing to have cost be the only lever that we could really pull.
Mhm.
I just think that that's pretty cool to think about, really, as you talk about the impact and that human experience, such a different perspective versus, well, how do we trim every bit of fat in here? How do we thin out staff to have, higher ratios of beds to staff? And, I mean, there's stuff that you would see coming down to like the quality of sheets that are chosen and robes and everything. And it just, um, yeah, not decisions made based off folks' quality of life. So I think it's cool that you guys can come in, and really improve the experience, and really make it a higher tier product. And it sounds like competing on differentiation rather than having to just compete on cost, which I think is often the perspective. So I love hearing that.
I mean, the best business is done when we're there should be a strong bottom line, but a bottom line, it's not that it's going to take care of itself, but people are going to gravitate towards quality. People are going to gravitate towards care, towards true dignified care, right?
Yeah,
Where they know that things are, someone is going to be cared for. That's our philosophy on the multifamily side, is like, how do we provide the highest quality of life? Now, this is truly allowing our investors to have their dollars placed in doing work. Again, we did it in the multifamily space, and being able to apply that to the assisted living space, I feel like it's an even more amplified opportunity, just by nature of the demographic. And that's where I was always told, like, I had to balance my heart with the numbers. And now I feel just like my background in education and real estate is officially completely fused together. And I feel like assisted living is taking, like, you can have the heart and you can have the business, and they can be fused together, and they can be absolutely powerful for everybody. Like, the
very cool.
investors, they should be compensated well. In any investment, I believe investors should always be well compensated. There is a risk involved when you invest.
Hmm.
So great, they can be well compensated, and residents can be well compensated with a high quality of life.
Love that. That's a great place to segue, because that's really what I wanted to understand next, is just give people high level and understanding of what do returns look like in a assisted
Mm.
living deal. It's kind of maybe time frames and returns, just high level people could expect.
Yeah, that right now, when we are comparing, say, a multifamily purchase in 2023 in a very interesting market, right? Our returns on the assisted living side are generally stronger. Definitely stronger than a lot of the offerings that I've seen. But not that different than returns that we saw in multifamily, say in 2019,
Mhm.
2020, that were being the projections very similar. Definitely, like, on a 5-year hold, able to double an investor return, having an average, an internal rate of return, of 18 to 22%. So we have, some of those similar metrics. I mean, we have
Yeah,
some baselines for our company where we're like, the threshold is we're never going to go below a 15% IRR. We're
sure.
always looking at, can we double? So moving into this space, and I'm going to say that those are all very conservative. Like, so we have actually taken out like money, other incomes that are coming in. We've actually pulled that out. If it's not
Mhm.
something that we know that we can rely and depend on this particular underwriting, we just omitted it completely and said, can this survive? So, for example, there's direct care workforce funding that comes from the government, and it's slated to renew in this year. So whenever you're listening to this, like in the year of 2023, it's a 2-year program. It gets renewed every 2 years. It's up for renewal. It will be voted on very soon. They're thinking it's going to pass once again.
Mhm.
But what that does is it provides a very substantial amount of money. Nearly $250,000 was allocated for the previous year. And so that's a lot of extra income, other income
Yeah.
that could potentially be coming our way that's not being accounted for.
Gotcha.
So when we're looking at, historical vacancy rate of, conservatively, we'll say 5%. I think it's actually more in line with like 3.7%, but we're underwriting that with a 10% vacancy rate.
Mhm.
So I can have a lot of confidence that the projections we have are very,
Yeah.
very foundational. Like
Yeah.
there's a lot of upside that is not baked in and intentionally not baked in. And I think you and I have, our companies have similar philosophies of like, let's under promise and over deliver, because we don't want to be the people that are like, hey, here's the moon and here's Pluto. We'll call it a planet now because we decided that and you can have it all. Like, who wants to be that person?
For
And then just be
sure.
like, oh, no, it's not working out.
For sure. Absolutely. That's the right way to approach these. And so it sounds like returns, yeah, similar dynamics, similar way that they pay
Yeah.
out. So you're kind of used to that. If you've been used to
Yeah.
seeing other real estate investments, it would be comparable or easy to understand at least how the return dynamics work. So that's good to know.
Yeah.
Well, with the few
Yeah. You're
minutes we have
not a new
left,
language.
no new stuff. That's always helpful. With the couple minutes we have left, I mean, what just leave us with, I mean, what are the top, 2 or 3 things we need to know about this or that you've learned about it that could help investors as they think about these deals?
I would say something I'm deeply convicted on is you must have the management being vertically integrated is imperative. Because just like on a multifamily purchase, you want to know that you have, and you know this from personal experience, you want strong property management there.
Mhm.
In assisted living, if you do not have strong management in place to oversee, because you're overseeing far, far more than just the real estate and some tenants, coming and going. You're overseeing government programs, you're overseeing medical, records and medical, just so much on the medical side, even though it's not, their medical care is not being provided. I mean,
Mhm.
you still have medications and such. So you just have a lot of pieces that if they slip through the cracks, you could lose your licensing, you could get hit with fines and penalties, and worse than that, maybe you have an incident with a resident that doesn't work out well. So I would
Sure.
say number one is make sure that, if you were looking at an assisted living deal, make sure that you understand who is managing this and who's managing the day to day and who is overseeing that management.
Mhm.
Are you vertically integrated? Are you taking care of that in house? That gives you a lot more control. And I think that this particular asset class really warrants that highest level of control. And that's another way that you can really manage the costs associated. Like you're talking about like people just cutting it costs here, there, and everywhere. And like that's one way that you can actually, really help insulate that when you have it in-house versus you're shelling out to a third party. So that would be number one. Number
Yeah.
two is understand what the business plan is and if they're do they have a track record, anyone you're looking at, to really perform on that. And that's really, again, no different than if you're looking at a multifamily investment. In my opinion, this is dealing with people on such a deeper level, the level of care, because multifamily people are, unlocking the door themselves, coming in and out and cooking meals and doing their thing. Here, you're caring for people. So just ensuring that that level of care is
Yeah.
there. Um,
Yeah, I mean,
I'm going to leave it at two
you're real 2 is great. 2 is
because
great,
it's a
right?
lot.
I mean, it's a lot to unpack, and I think that but well said, well taken. I mean, yeah, management, it just yeah, it seems around the management being so much more important because you really are caring for these people's lives, not
Yeah.
just the place that they live. I mean, there's a you're caring for those individuals, and so I completely understand how that's critical and quality even more critical. So I think you've given us a lot to think about. You've hopefully opened some people's eyes to a new type of investment opportunity. I would say it's absolutely real estate, but it's also kind of real estate tangential in that there's a major operating business there too. So it's but you can't deny the demand and supply dynamics of and the amount of this type of facility that is needed out there. I think, like you said, you cannot build enough right now. And we're not even, I still don't even think in 2023, we're at the peak of the silver tsunami or whatever you want to call the wave
We have
of
15
folks
years.
retiring and moving through. What was
The
that?
next 15, 20, the next 15, 20 years
Yeah,
are
substantial.
so substantial.
Substantial. Well, wonderful, Julie. Well, thank you so much. Before I let you go, I got to take you through our keys to success round. You don't get out of it, even though you're an alumni. And the first question I do want to ask you is, so think about one of these deals. If you were
Mm.
an investor going to put your money in and you could only ask one question, what would that one question be?
My question will be different than almost anybody's out there. I always want to know, what have you already done with this team or with these people involved that would be evidence of how you work through challenges together,
Yeah.
and that would also demonstrate, not necessarily directly but indirectly, how you're going to protect the investors involved. How are you showing me that you guys can work through challenges in a respectful way and protect other people at the same time?
Yes. I love that. I was just reading one of Patrick Lencioni's books. Where the heck is it? It's the um, TBD, Four Obsessions of an Extraordinary Executive.
Oh, wow.
And most of what you just talked about is exactly what that book hits home. And I loved that piece of it. So I was just reading on the plane yesterday, is near and dear to my heart was, I mean, that's what I've become hyper focused on too. I've realized talking with partners or potential partners, it's really, that's the golden question. It's, tell me about that time where it didn't go
Mhm.
well and how did you guys work through it together? Because
Yes.
teams that have been through difficulties together are ultimately so much stronger. That's one of the points it makes in the book. But yeah, I love that. So anyway, that resonates with me. It's based on what I've been reading lately. So absolutely great question. Second question is, what are you most proud of in your career?
Wow. That's like a tough question for anybody. I think that my willingness to put my ego aside and to follow curiosity and to ask questions that some people would be like, I don't want to be the idiot in the room. I'm not going to ask that. But really, that willingness to be open and say, my self-worth, my identity is not directly correlated to X, Y, or Z. And
Mhm.
so over the years, I've cultivated an inside out confidence in it, because it's like, I'll follow curiosity. Like, it's not, I'm not an idiot just because I'm asking a question. And it has opened up so many paths of opportunity, and so many conversations that just, it's just opportunity after opportunity, just because it's a willingness to just be like, well, let me ask, let me find out, let me be willing and open, and
Yes.
just follow the path that unfolds before you.
Man, how many times have we just not asked the question we know we should ask because we just don't want to feel stupid, right? Like, I mean, so many times. And so I think that's a fantastic skill and yeah, very brave. And I'm sure that was a big part of you being able to make such a successful transition, way back when now, but from teacher to real estate investor. I'm sure there was a lot was new to you, and I'm sure there were a lot of
Yeah.
questions.
Yeah, definitely. And I think, and listener, I want you to think about this also. What's ahead that you're missing out on? If your ego is in front of you, then what are you missing out on? And
Mhm.
it's like, I don't want to miss out on something just because I'm in a self-protective mode. And I mean, seriously, the opportunities that have opened up, the stages I've been able to be on, the podcasts, the meetups, the everything that I've been able to do, it's just by way of put the ego aside and just like live, or have a healthy ego. Ego doesn't have to be totally put aside, but a healthy
Yeah.
ego is like, I received myself where I am and this is great. And it just opens up the floodgates of opportunity in business, in life, in every aspect.
Yeah, I love that. I love that. Next one is, what book should everybody read? You got one that's top of mind right now?
you and I are both avid readers. And something came to mind when you mentioned a book, but I'm going to throw two out there because they've come up in conversations every time. I even said a line: follow the path that unfolds before you. I think everyone should listen, because it's so well read, to The Alchemist by Paulo Coelho. Like,
Mhm.
that's a must listen, and it's great for kids. It's a fable, and it's hands down one of my favorites. And I have been I'm ready to reread The Four Agreements by Don Miguel Ruiz. And I think that the world would be a better place. I'm a person of faith, but
Mhm.
regardless of what other people's, like anyone's beliefs, can we just all agree on these four agreements and the world would be a like beautiful, wonderful place?
I love that.
And they're both fast and they're both very family friendly, and good internal practices create a powerful external appearance in the world.
Mhm.
So when we're taking care of who we are on the inside, our businesses are going to thrive, our relationships are going to thrive. And so
Yeah,
I
so
have
true.
business books that I love, but I think those two drive really great business practices.
That's so true. Absolutely. Lastly, what is your number one key to success?
Ooh, I used to say fail forward, but I heard somebody say this, so I borrowed it. I'm forever borrowing it. Trip forward, because I haven't failed. You don't fail.
Oh.
Einstein said you haven't failed until you stop trying. So I'm
Mhm.
like, so it's really not failing forward. But I heard someone say tripping forward, and I'm like, I've just tripped my way into success, right? Like, success isn't overnight. It's not just like this one, oh, like boom, I'm successful. It's being comfortable, just like, oops, I tripped, but I didn't, maybe I did a face plant, but I got back up, and I'm running trip, whatever.
Learning as you go, right? Learning as you
Yeah.
go and asking good questions along the way.
Yes.
Very cool. Well, Julie, thank you so much for coming on. Thank you for teaching us about assisted living today and opening up some of our eyes to a new opportunity. Folks want to learn more and get a hold of you. How can they reach you?
I love LinkedIn as a social platform, and let's make it super easy. You can go the back door of my website and find time on my calendar if you go to julieholly.com. And you just head there. I love talking with people. We're like, Kent and I are not just voices on a podcast. We actually like care about our listeners. So, you know, find time on our calendars. Let's connect and see what your investment goals are and how we can support you.
I love it. All right, Julie, we'll link that below so folks can reach out, get some time on our calendar, everybody, fill it up. And thank you so much again for coming on. I hope you have a great rest of the day.
It's going to be even better. We got to hang out. This is the best day ever.
Absolutely. Thanks, Julie.
Thank you.
Thanks for listening to another great episode of Ritter on Real Estate. Hit the subscribe button to make sure you don't miss out on the content that will make you a better investor. Also, visit kentritter.com for articles, videos, and tools curated just for passive investors. Until next time, this is Kent Ritter with Ritter on Real Estate. Now go out and invest like a pro.